Welcome back to the Playbook, episode 8. If you're new here, hit that like, subscribe, share, listen. All right? Hear me. If you've ever thought about owning more than one property, this video is for you. If you already have a property and you're just itching to buy another one, this video is for you. All right? If you've ever wanted a property that cash flows by itself, gaining you a net positive in your bank account every month, this video is for you. Here's the reality that we live in, okay? Most people that own a home, they're like, man, I want to buy another one. So they go to the bank or a lender and they sit down and they pull out their tax returns and their W-2s and their pay stubs or any other bank statements. They say, here, I'm looking to buy a second property, an investment property. I'm ready to build my real estate portfolio today. The bank looks at the documentation. Your income's too short. Slide the paper back. That's the wall, okay? We call that the wall, the denial wall. Bam, the income wall. Let me hit a stat for you. Did you know 99% of denials on loan applications is because of income? I made that up, but I'm sure it's a big number. The wall. When people hit this wall, that's when most people quit. But let me tell you, DSCR. Learn about this tool. Once you understand how these work, you won't need income, you won't need tax returns. All you'll need is the right property. Let me explain, okay? You wanna invest, you're self-employed, maybe you got a couple mortgages already. On paper, the bank says no, your debt to income doesn't qualify because it's too high. Meanwhile, the property that you found could easily cover its own mortgage every single month. Perfect. So here's what a DSCR stands for: debt service coverage ratio. Basically, it's the bank or lender's way to figure out if a property can pay for itself. Okay? Simple way of terms. Okay? If the rent is $5,000, if the mortgage is $4,500, you're in good shape. Again, what does the mortgage consist of? Principal, interest, taxes, insurance, and if there's an HOA. If your monthly rent covers the entire mortgage payment, PITIA, principal, interest, taxes, insurance, and HOA, you're in good shape. You might have a deal. That's it. There's no income required, no tax returns required. They are not judging your income or you, they are judging the property. All right, so let's talk about what it takes to actually do one of these loans. Yes, your credit does play a factor in trying to get a DSCR loan. Again, you can't be walking around with, a 400 credit score and expect to be able to do one of these types of transactions. Second, these loans do close a lot quicker than your standard traditional and conventional loans, and mainly it's because they're due to the minimal paperwork that's required. Again, if the property cash flows, so again, PITIA, principal, interest, taxes, insurance, and if there's an HOA, if that is lower than the estimated monthly rent, you have a shot, you have a deal, you're in good shape. Now, the down payment. So the down payment, usually you're looking about 20 to 25% down. I know that sounds like a big number. And yeah, the more you put down, the better your rate, the better your deal looks. And there are also some solid options such as interest-only payments. Gift funds are available on these types of transactions. And you can even give up to 6% seller concessions on these types of transactions. Again, a lot of these things vary by lender. Speak to your mortgage guy or gal to figure out your specific scenario. Here is one thing that investors love about this loan program. You can invest, which means you can hold title in your LLC, in your S Corp, in your C Corp, and even in your revocable trust. Again, yes. Property types, they're pretty flexible. Condos, single family residence, multi-units, all that good stuff. Again, if you have a bit of a tricky scenario, you want to speak with a qualified mortgage professional to know your specific scenario. So yeah, that's the real breakdown. It's not complicated. It's really best about knowing your options and knowing what box you fit in. So lastly, most people want to invest in real estate. They just don't know the options that they have available to them. The DSCR loan is an amazing tool that you need to have in your toolbox if you plan on growing your real estate portfolio. Yeah. If the property cash flows, you qualify, period. So if you're serious about owning rentals, drop a comment below if you want to know how a DSCR loan works. Until next time, this is Playbook with Charlie, giving you real plays that win.